This is Retirement Lifestyle Show. I'm your co-host, Adrian Nicholson, and today we have another great episode, our second episode of 2026. And this episode is called Important Money Decisions, Taxes, Investing, and Benefits. We're going to be covering the essentials: taxes, investing, benefits, the moves that quietly but powerfully shape your financial future. So if you haven't already, go check out our website, retirementlifestyleshow.com. A lot of the key categories and topics that we're going to talk about today, we have more information and more episodes on those individual topics. If you go to our website, you can find them, or our YouTube channel, retirementlifestyleshow.com, again, is another great place where you can dive a little bit deeper in some of these topics that we're going to talk about today that will help improve your financial future, which is always the goal of the Retirement Lifestyle Show. So we're going to touch on one that we've talked about a lot before recently. So the first thing we're going to talk about today are 401k and employer plans. The key points is the first one that we always look at to see is if the full employer match. So when it comes to 401k, we want to make sure you get the full employer match. This isn't investing, this is just free money. You want to maximize any type of employer plan that offers a match. And also something too that you need to look at is seeing if timing matters. Something to consider about when you're looking at an employer match is see if you can increase your contributions for the rest of the year. This really is dependent on how much you're able to save every month, what your cash flow is, and ultimately what your lifestyle and expenses are. So if you're able to get the full match on your employer plan, this is a good place to start just to see if you're able to get that free money that we talked about when it comes to employer plans. Something also too that you should consider this year and look at is bonuses or your final paycheck. Sometimes this can get messy. Unplanned bonuses can get eaten up by taxes or default withholdings. So now will be a perfect time to plan for that and see if there's any adjustments you need to make today so you don't have any issues with that going forward. So review your 401k contributions just to see how much money you're putting in to see if you can save on taxes. 2, make sure you're getting that employer match as offered to you. We like to call that free money. And then 3, look at any unexpected bonuses or final paychecks when it comes to how much money you're withholding and how much money is taking out for taxes, because you don't want to owe more or get back more. You don't want to owe more at the end of the year when you file for your April taxes. This is especially important to consider if you've had a raise, a job change, or you're receiving new benefits. And the best way, we talked about this before, automate, where you're doing this on a reoccurring monthly basis. That's a fixed electronic version that you set up that's handling this for you. Next, we're going to talk about 529 plans. Some key points that you need to understand when it comes to 529 plans are contributions generally must be made before December 31st to count for this tax year. Some key points that you need to make for 529 plans is contributions generally must be made by December 31st to count for the tax year. Again, like we talked about with employer plans and 401ks, set up an automatic savings. This can help you receive those potential state tax deduction and credits if your states offer that if you're putting money into a 529. So this, again, it's a great way to save money on taxes while planning for education. A new thing with the 529s, which is very important, is something that came out in the Secure 2.0 Act, was that unused 529 funds can be rolled over into a Roth IRA for the beneficiary. The limit is $35,000, and you have to have the 529 account for over 15 years. Also, something too, which a lot of people don't know about with 529 plans, is you're allowed to update and change the beneficiary, which gives you more flexibility. Next, let's talk about investment strategy and tax strategies. Again, this is an investment advice or tax advice. Always seek professional help or ask a consultant or financial advisors before making any decision. But these are some key points that you should take away from this podcast, especially with the markets being very loud and volatile to kick off 2026. Focus on your plan, not predictions. Stay invested, invest automatically, or avoid reacting emotionally depending on what the markets are doing. If your plan changes with every market move, it's not a plan, it's a reaction. And this is something too where It's a good time just to see how your investments align with your goals, how your investments align with your financial plan, and ultimately how your investments align with your comfortability and your comfort level. Something too that you can look at now that we're in 2026 is planning more for capital gains and losses. In 2025, you found yourself scrambling because you had a very high tax bill because you did a lot of selling with some profits that you had, or if you had some losses that you're trying to capitalize. Since we're in a new year, now would be a good time to plan for that going forward so you're not scrambling like you did last year and figuring out what's the best way to reduce your tax bill or save on some of the losses that you may have. Harvest losses to offset gains, realized gains in a low tax year, depending on what your tax bracket is, could be huge savings for you. And also be mindful of wash sale rules. What this is you can't really do a lot of buying and selling and taking losses altogether within a 30-day window because you're not allowed to just do that. Your return is what you keep. Taxes do matter. We also could talk about requirement minimum distributions. What you need to know about this is you have to take these before December 31st. This applies to traditional IRAs, old employer retirement plans, and missing an RMD significantly can have significant penalties and tax implications. Even if you don't need the money, you're required to take it out. And again, this is something that you have to look at. What are the age criteria when it comes to my RMD? Because if you do turn a certain age, which is 73 and above, that's when you need to start looking at RMDs. If you're below that, it doesn't apply to you. But this is something too that you have to plan for and be careful about because again, if you miss this, you'll be hit with penalties and taxes, which nobody wants to deal with. So now is a good time to check in and look at this. I also want to talk about health savings account and contribution. This is another powerful tool. The benefits of a health savings account is it offers tax deductibles. It saves you money pre-tax, which is good. It saves money on taxes. It allows for tax-free growth and tax-free withdrawals for medical expenses. This is the intersection between investing and insurance. It's often underused. And again, it's a triple tax savings, which helps you save money on taxes. It allows the investments in that account to grow tax-free, and it allows for tax-free withdrawals. Also, something too that's relatable in this category, but are not health savings accounts, which people also like to talk about and look at, are flexible savings accounts. These are use it or lose it. A flexible savings account is, again, a way for you to have and save on taxes. This is pre-tax money for medical, dental, or vision expenses. Most flexible savings accounts expire at the end of the year, so this is something too that you should plan forward and see if this is something that you can use this year. Some allow some small carry forwards or some grace periods, but that's something too that depends on what type of plan that you have. And you're not allowed to invest in this like you are for a health savings account. So you want to avoid any unnecessary taxes. Something too that I think is worth mentioning on this podcast as well is reviewing beneficiaries. This is very critical because checking beneficiaries is vital because again, sometimes you may be somebody that has a lot of different accounts, whether it's a 401k, 403b, IRA, Roth, a health savings account, a brokerage account, bank accounts, checking, savings, whatever it may be. You should check to see what those beneficiaries are on that account or add beneficiaries if there's not on there because this is something that is extremely important because even if you have some estate plans and wills set in place, beneficiaries on an account sometimes supersede what your estate documents have. So this is why it's very important to check those accounts that I mentioned. Life insurance policy, bank accounts, investment accounts. It does matter because like I said, sometimes beneficiary designations override your will or your estate documents. Outdated forms, money goes from where the forms say. This could be a quick 10-minute check-in to prevent years of problems. Also, it would be a good time to talk about we're approaching the tax filing deadline April 15th. And if this is something that's causing you a lot of stress or you feel unprepared or you're not ready, you need more time, you are allowed to file extension deadlines. But again, you're allowed to file extension deadlines to delay paperwork, not payment. This is something too that's key that can be overlooked that can save you money on interest, penalties, and stuff that you really need to get done before that 15th deadline. Also, too, when considering April 15th is approaching, This will allow you to make IRA or Roth IRA contributions depending on what your financial situation is and what your income level is, or if you're contributing to an employer plan right now. Contributions for prior years are allowed until April 15th. The benefits to this is it can lower last year's tax bill, boost retirement savings retroactively. It's a very rare moment where you can invest backwards and save money on taxes while investing for the future. So we definitely covered a lot of topics today, but like I said, check out retirementlifestyleshow.com if you want to get a deeper analysis or more information on some of the things that we talked about today. But I think this podcast is a great way to remind you, now that we're in a new year, to plan for financially some of these things that can really save you a lot of money on taxes, boost your retirement savings, and put you in a better position to be more financially successful in the future. And remember, personal finances isn't about perfection, it's about awareness, planning, and taking advantage of opportunities. And remember, personal finances isn't about perfection. It's about awareness, planning, and taking advantage of opportunities. Whether it's making the most of your 401k, staying on top of beneficiaries, using April 15th as a chance to act before then, even small steps have a big impact. Thank you for listening. Here's to smarter decisions and financial peace of mind. Until next time, keep learning, keep planning, keep growing. Again, we're on a lot of the streaming services, YouTube. You can go check out our website. We have a plethora of content out there, and we really want you to take control and achieve your goals. I know sometimes it can get a little complicated when it comes to, how can I be more tactful? How can I be more efficient with my finances? Am I meeting all the deadlines in a proper time? This is where financial planning and this podcast really can shine and help you out a lot by making you stay on top of some of the most important things, and sometimes very simple, easy things if you catch them to do, that you can make those changes today that can compound and pay your financial future over time.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.